Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Let's get to your top stories today. Very little to almost nothing really happening across markets in Asia as investors hold their breath for Nvidia's results, seeking fresh signs and whether this AI frenzy still has room to run. Now, Chinese consumer stocks in the spotlight this hour as JD.com and Anta announce some buybacks amidst, of course, this downturn we're seeing across the consumption space. Also ahead, China stresses mutual respect and peaceful coexistence as Foreign Minister Wang Yi meets with President Biden's National Security Advisor. Plus, earnings and the China impacts in focus as we speak with the bosses of big Australian miners Fortescue and Lynas.
Hold your breath, get the popcorn ready. I think that's what we're doing here in the next 24 hours as we await, of course, finally that day where Nvidia earnings are going to be dropping on this Wednesday in the U.S. So certainly it is probably arguably one of the most important tech earnings in this year or even this season, and certainly one that might actually dictate where the market direction is going to go. Is it going to spark another AI rally or trigger some sort of risk-off sentiment, of course, if they don't deliver? We'll talk about the expectations leading out to it with Bell in just a bit. But here's how the market setup is. As Dave mentioned, it's dull, it's boring, or flat on the Asia-Pacific index and stocks here today. U.S. futures are slightly on the negative side. The dollar is flat as well. We're watching markets like TSMC, the like Taipei. We're slightly to the upside here. We did see Nvidia stock actually rise ahead of those earnings yesterday in the U.S. session. But mostly, we're not just seeing that much movement in stocks here. We're particularly watching oil markets, though. It looks like we've halted that three-day rally. Perhaps, things were a little bit overdone given those concerns over the Libyan supply threats as well. Iron ore also seeing a bit of a rebound here. We're at 2-week highs now for iron ore and back above that 100-day, 100 sort of level. And, we're starting to see maybe even steel prices in China taking higher as well. We're talking about Fortescue. We got the CEO coming on the next hour. Shares slightly higher here. They did see profit jump a little bit of news there in the dividend side of things as well. Here's set up to China, of course, as we take a look at what's really going to be driving this market. We talk about the Shanghai Composite now leading back to levels that we saw since February. We have BofA coming on, Winnie Wu, saying, look, how do we find the silver linings in a pretty boring market here right now? She has a few ideas for us. Futures are negative this morning, Dave.
Yeah, what's the playbook, as they say, to borrow part of the phrase, of course, from that movie. But yeah, I mean, we're looking ahead to Nvidia, and as you can see, Nasdaq futures are down about 0.25%. So overnight, really, and just to underscore this, this narrative of this lull or dull we're seeing in the markets, your daily turnover usually on the S&P 500 year to date, when you take the daily average 2024 is 81 billion, 61 billion barely overnight, second lowest turnover of the year. Although when you look at the cash markets, while there is a lack of conviction there, it's really in the options market that is quite telling. In fact, when you look at the positioning ahead of Nvidia and some of the index options that expire tomorrow, so this time tomorrow Nvidia should be out, and you look at where the index is, so the 5 most active options are all put options with strikes at these levels. And don't focus too much on the level of the strikes. The point is the most active ones are all puts. And it just goes to show, really, Yvonne, looking at the price action, the behavior of markets from this past earnings season, and as we sort of wrap things up with the big one, of course, coming through, the market's been very hard to impress. So you do understand, of course, why there's all this hedging going on ahead of, to your point, the world's most important earnings report.
Yeah, I think some analysts said the comparisons are biblical right now.
Wow.
And yet, this company has been able to deliver time and time again. Can they do it again? Let's bring in our Bloomberg tech reporter, Annabelle Jewelers. And Belle, just walk us through what we're expecting here today.
Yeah, well, as you said, I mean, this is a stock that makes up around 6% of the S&P 500 at this point in time. We've never seen a run-up to have that sort of weighting ever before. So really, it just injects that extra level of uncertainty, of volatility, but also that magnitude, just how important these Nvidia numbers are, because they're basically a macro event at this point in time. But the expectations are solid, and actually we're expecting to have seen a 70% rise in revenue for the current quarter. Some out there are expecting an even larger surge than that, and you have seen that price action over the course of this month, because Nvidia's risen about 10%. So perhaps there are some that are expecting another blowout quarter, even stronger numbers as well. It's really going to serve as a barometer, of course, what Nvidia says, how much that can justify all of the optimism and enthusiasm around AI spending across much of the tech industry. So certainly a lot to be watching out for today. And as we say, really low volumes ahead of that. I was just taking a look at Asian trading so far, and we're about 40% lower than we would typically be on a 20-day moving average basis.
Yeah, and Bill, so apart from obviously what they report on top and bottom line, what they guide toward, just help us understand also, there have been rumors and speculation in the market around delays with the Blackwell chip, and should we expect any more clarity on whether or not these things are delayed, in fact?
Well, this is going to be really one of the key things to watch out for. So just to give some context here, the Blackwell chip lineup is sort of seen as the next generation of AI chips. And earlier this month, we were reporting that perhaps there could be some delays to that lineup coming to market. Production is expected to ramp up in the second half of this year, but we don't really know anything yet on what sort of delay really is at stake here. Is it just a matter of days or weeks, and it probably doesn't matter too much to the market or the bottom line? If it's months, though, then it could really be a cause for concern. And so that's going to be really one of the key things to watch, even though there's a lot of analysts out there that say that the demand for the ones that are already currently in production, currently being sold, there's enough demand for those to make those snags around the Blackwell chip lineup sort of immaterial as well. But certainly, again, as we say, really going to know or want to seek some sort of reassurance on that Blackwell chip lineup.
Yeah, and how are analysts looking at this stock now in terms of valuations, positioning? Is there actually more upside in store?
That's really one of the key questions as well. I mean, we talk a lot about has sort of the juice been squeezed out of Nvidia as yet. There are a lot out there that say even at these current valuations, the stock is still looking reasonable. And so Morgan Stanley, for instance, is one of those that's still keeping their overweight. Their price target is 144 for the stock. They're saying that demand shows no signs of moderating. And you think about Nvidia's biggest customers as well, like Meta, like Amazon, like Alphabet. These all are really racing in this sort of arms race, really, for AI supremacy. And so they're continuing to keep up their demand for AI chips, and that justifies, really, Nvidia asking for these price tags as well on their chip lineup. So, yeah, big question, of course, but it does seem like there could be further gains from here.
Belle, thank you so much. Annabelle Jewelers, they're our tech reporter in Sydney for us. You can catch, of course, our exclusive interview coming up with Jen-Hsun Huang, Nvidia CEO, after they drop the results. He sits down with Ed Ludlow, of course, a colleague with Bloomberg Technology. Special coverage, August 28th, at those times on your screens. Right, counting down to the open of trade. The Wednesday session, 22 minutes away. We'll get you guys a preview of what to watch in these Chinese markets. Futures are pointing materially lower, 0.4%. You're watching The China Show. Right, welcome back to shows. The Wednesday session is just a couple of minutes away here. So a couple of stocks we're tracking here. These buybacks, of course, big ones, right? JD.com, Anta Sports. Of the two, it looks like Anta will be seeing the biggest gains. I'm looking at maybe 10% at least in your pre-markets. We're indicated, I mean, we closed at about 71. We're indicated about 80, 81 bucks on that specific stock. Speaking of specific levels to watch here, and these have been levels we have been tracking recently. So on the CSI 300, 3,300, that's where we have been bobbing in and around, and the level that's arguably state funds had been defending. On the Shanghai Comp, that's at about 28.50. Updates, of course, coming out of the visit to China from Jake Sullivan. We talked about the buybacks. And, of course, oh, by the way, yeah. So today is the first day that Alibaba, the primary listing, is in Hong Kong. So it's fair game It's now eligible to be bought across the Stock Connect there. And of course, as Yvonne is pointing out, this rebound we've seen this week so far in iron ore and broadly speaking, things like copper rebar futures, we've seen that also play out ahead, of course, of some big interviews later on in the next hour of the China show. We'll be speaking with the Fortescue and Lynas bosses there as well. Iron ore, and of course, there's also this big scoop, Bloomberg scoop on HSBC, that the new incoming boss might be looking to take a cleaver to middle management in the sweeping overhaul. So more on that story, and maybe some stock reaction in about 8 minutes from now.
Yeah, let's bring in Winnie Wu, China equity strategist of BofA Securities. You talk about it being boring out there in the Chinese markets. What can we talk about? What are some of those silver linings now?
I think the silver lining, at least China is an uncorrelated market to a very consensus global trade. You know, we look at the past 10, 20, 25 years of market performance, and it turned out that Taiwan, India, even Japan market are highly correlated with the US for the past 10, 20 years, right? Whereas China is basically uncorrelated for the past 10 years and negatively correlated in the past 3 years. Especially in Asia, we see negative 60% correlation between China market and Japan, or China and India. So, well, you know, people made a lot of money betting on AI, on the strong US market. But if, you know, for some reason this trade start to unwind, start to tumble, then China may be an uncorrelated hedge that offers some value in portfolio allocation.
So that's the observation. It's negative correlated. What's the action? Are we seeing portfolios start to use that information and flows start to come in?
We've seen a little bit of that in April, right? The mid-April to May rally was partly driven by long-only unwind, the long AI, long Japan, short China trade, and we saw real money buying China back then. But I guess at that time, there's also the fundamental support in terms of China macro data were beating expectations in first quarter. GDP was being revised up, and also by late April, there were high expectation of property stocking measures that can help solve the property market issue. But for now, I guess, you know, the missing part for people to be more bullish on China is the fundamental element that we haven't seen, you know, the more positive policies to support economy, and we haven't seen the turnaround in terms of the, you know, expectations on, for example, consumption and unemployment.
That brings me to what we saw in PDD yesterday. I mean, I know you can't talk specifically about the stock, but the fact that this was a key beneficiary of this consumption downgrade story is talking about growth is going to fall inevitably. What does that tell you about the consumer sector? Further weakness, or are they just managing expectations?
I mean, you know, to some extent, it's not wrong to say like 140% growth is going to decline inevitably, right? I mean, you can say that to any high growth companies. But I guess, you know, some lessons learned from that case is, one, if the growth is slowing down, then investors care more about return, right? So if you're a high growth company, you don't do buyback, you don't do dividend, we understand. But if we're talking about expecting growth to slow down, then investors will look at, okay, what's the buyback story? Yeah. But, you know, if you don't have growth, or meanwhile, there's no, you know, shareholder return, then I think that's the frustration. But also, you know, as the security regulators pointed out earlier this year when they talk about the SOE value up program, a key element is enhancing investor communications, right? Being transparent, show that you respect the secondary market, you care about what investors want to know. So I think that's still some lessons that can be learned by, you know, some of the private sector companies or ADRs, which used to enjoy good valuation, good growth premium. But going forward, if growth is indeed slowing down, then they can do better in terms of the investor communication and services front.
How much of a strategy does that make sense as a strategy? I mean, Anta Sports, JD.com have been giving back money to shareholders. How much does that help?
Yeah, I think for this year, this is actually the most important strategy, right? If we look at the different themes, the best performing theme is the high dividend yield strategy. And when the share prices, when market valuations been going down, a lot of investors were questioning, what is the floor for valuation? Is there a floor? Or what's the anchor? But if there is a dividend or buyback angle, I mean, technically it provides some support to share prices on the buyback, but also when dividend yield is high enough, it's also an anchor to share prices, so that even for some of the internet stocks, people will say, hey, this internet stock, the buyback plus dividend yield is high single digit, as good as a Chinese bank.
Yeah.
So which one should I buy? Right.
And which one should I buy then? Should I buy a tech stock or a bank stock?
Yeah, so I think it's about the yield itself, but it's also about the certainty, right? So to some extent, investors like SOE's yield story because their earnings, or SOE banks because the earnings are more certain, whereas buyback, there's more uncertainty, right? If this buyback program is for next 3 years, is that front-loaded, is that back-loaded, is that sustainable? So yeah, people want the certainty of the return as well.
Yeah, and, I know you have some thoughts on the banking sector because they're set to report. We could talk about that later, but just generally, what's your sense been of this earnings season so far?
I mean, so far we're still seeing much more downgrade than upgrade. It's around 2.7 to 1 in terms of downward revision versus upward revision. Internet sector is probably the best in terms of, even though top line growth is kind of lackluster, but bottom line generally beat expectation by a lot. But besides that, we've seen significant earnings downside in sectors like, materials, tech, in terms of like property-related sector, auto sector. So the earnings downward revision is not finished yet.
Okay, Winnie, stay put. Lots more to talk about with Winnie Wu here. She'll be rejoining us in a couple of minutes there out of BofA Securities Equity Strategist. All right, going into the open today, we're looking at futures pointing lower, although here's the silver lining. We're coming off lows a little bit there on some of these contracts. Going into the open today, 11 minutes away, this is the China Show.
All right, some stocks to watch at the open. We're watching JD and Anta, as we just mentioned earlier, both announcing some big buybacks here. $5 billion one from JD.com. Anta as well. We're seeing that pop of 7.5% for Anta. So that certainly is helping, given that, you take a look at the earnings as well. That's one story. But the weakness in the consumer sector, that certainly is what's been weighing a lot on these stocks. So this is probably the buffer that you're seeing here, a bit of return for shareholders here today. And we're watching HSBC after that scoop from Bloomberg News, considering cutting management layers in sweeping overhaul. They're focusing on the middle management, according to our sources. Not much movement in the stock so far.
No, not much. 0.4%. In fact, let's get the details on that Bloomberg scoop. And joining us now out of Sydney is Adam Haig with the details here. So, Adam, at this point, what do we know, and when might the bank start to act on what we know?
Yeah, David, I think really this is the first sign of what we're seeing from the new CEO, and really wanting to put his stamp on make his mark early on in terms of the cost control. So what we know at this point is that it's likely to affect middle management roles. So that could include country head type roles in some of its global network. But there's still uncertainty as to how this plays out. And of course, these plans are potentially subject to change, of course, as well. But underlying all this is, of course, the broader cost pressure that's been very clear at HSBC, even under Noel Quinn's time, and that's been playing out, and lots of changes have been happening. And you can see how this is kind of an extension of that, and them wanting to really kind of trim down where they can to save money and focus the business on more of the important areas that are key to them, where they have their competitive advantage. And of course, we've seen similar moves from Jane Fraser at Citigroup on a global level, where she's of course focused the bank into particular areas that she believes the bank is strong on. And I think underlying this is the sense that at HSBC there are some roles within some levels of middle management that can probably go at this point.
Yeah, can you tell us a bit, more of that? It seems like it's a bit of a trend. You mentioned Citi. I think Stanchart was also a few months ago announced that they were kind of doing a similar strategy as well. I mean, what is this bank, HSBC, essentially going to look like at the end of the day?
Well, I think firstly, it's it's emblematic of the way that the industry's trying to rein in costs globally. Of course, we're going into a period where the global economy and especially the US economy is very fragile. We're going into a a rate-cutting environment globally where so much more focus is on costs. And I think what we're seeing at HSBC is just kind of one example of that. I mean, you mentioned Standard Chartered, that their path has been pretty clear in what they've tried to do there. Citigroup similarly. So it's another step in that direction to rein in costs, to work out where in the business they can remove some roles and some staffing and redirect that into areas that are better suited to investor return. And I think this is, with the CEO coming in now and officially taking over the role early next month, this is a real example of a big first move here on what he's trying to do globally with the bank.
Adam, thank you so much. Joining us, of course, with the details of our Bloomberg scoop and HSBC, our finance editor there over in Sydney. Right, just an update here on the Philippines. There was some concern because of the strong rain. There would be no trading. There will be trading in equity markets today. So that market comes online in about 5 minutes. Stay tuned for that. Although there will be no trading in FX, and also government and schools are all shut amid the heavy rain taking place there in the Philippines. But speaking of the weather, this calm before the proverbial storm.
It is pretty calm. The storm being Nvidia and across these markets, not really a real typhoon, but you take a look at how it is in the pre-market. I mean, you're seeing slight declines in the Hang Seng. HS Tech is lower by about 0.6%, and not much movement in the dollar or the currency in China, 712 for dollar China here this morning. So in terms of analyst actions, it's still sort of that PDD story. You see analysts after analysts, brokerage after brokerage sort of slashing those price targets. The latest has come from Morgan Stanley. Now, price target at 150 from 220. That still implies a 50% increase, okay, from the last price. They're actually seeing a little bit more upside here. In terms of what they're saying, they're maybe more positive. They're saying, look, it implies weak consumption, what the results were, intense competition, but management's comments on declining long-term profitability, too conservative. They say PDD, the only Chinese e-commerce player that will outperform the industry growth there. So that's certainly still some bright spots for that company. BAIC Motor 8 shares cut to neutral at JP Morgan. We also have some stocks in the properties market to walk for raise to hold with Jim Mao at HSBC.
Yeah, a couple of other stocks that we're tracking. So we're busy on the micro front today. So Li Auto profits slipping, of course, ahead of second half rebound, perhaps. And we're looking at Li Auto shares, bottom of your screens. That's the biggest decliner in your pre-markets today. Meituan's out with earnings. And we're also looking at Haidi Lao actually also came out. That's, of course, the company that runs a hot pot chain, out with earnings yesterday. Revenue slightly below estimates. Net income slightly below estimates as well. Shares, though, in the pre-market are up ahead of the open, 3 minutes away. This is the China Show. Good morning.
Welcome back. You're watching the China Show. We're counting down the open of markets. And of course, it is the final countdown to Nvidia earnings that are set to drop in the U.S. later on today. So right now, there's a bit of calm, as we talked about. There's not much to really talk about across these markets here right now, but there's a little bit of earnings story in Hong Kong and China here today. We talk about the buyback story in JD and Anta, some consumer stocks like Nongfu Spring Light reporting as well. BYD coming up next, too. So it's going to get pretty busy, David. Yeah,
busy in the Chinese market. It's slightly busy on the chip front in Asia. There's also the 7&I story, of course, in Japan, which we'll update you guys on. And, of course, the earnings story as pertains to the miners, of course. So lots of many themes across the Asia-Pacific, although when you look at the U.S., it's certainly one game in town. So maybe stay the day for Asia, then take the day off Wednesday in the U.S. Be sure, though, to come back by the close with an extra cup of coffee because you'll need it when Nvidia comes out with results this time tomorrow. Okay, the opening bell is, declines again here. Shanghai Comp, CSI 300, both should be trading, if not at, close to the lowest since February. And we'll get you guys a chart later on, and certainly the levels to watch there Within the mainland markets, though, what we're tracking is, first, we had a melt up yesterday in yield somewhat because of the industrial profits numbers, and also the renewed pickup last 2 or 3 days in metals prices. So copper is seeing some upside right now. Iron ore, 760 a pop, that's 0.7 to 1%. Singapore's back above 100 there, so about 102 as far as that's concerned. Right, the move in Hong Kong is this, and we talked about Meituan coming out with earnings later today. That's going to be coming up bottom of your screens. HSBC, the Bloomberg scoop, the incoming CEO might be looking to, what's the term companies use? Rationalize manpower. There we go. Middle management. Okay, earnings and buybacks. JD.com, Anta should be up overnight on those buyback reports. Anta should be up much more, 10%. BYD out with earnings later today, and of course, Xpeng and Dongfu Spring. Heidi Lau and Li Auto also out as well. Okay, levels to watch as promised. 3,300. The top panel on your chart is the CSI 300. And as you can see, we've been sort of bobbing right above that level. Every time we get below it, somehow we find ourselves closing above that. And a similar level is the 2850 level on the Shanghai Composite, which is practically where we are as we speak.
Yep, and we're taking a look at when it comes to Aussie CPI numbers just dropping on your Bloomberg here right now. So actually better than expected. So 3.5%, this is the year-on-year numbers. The trim mean is 3.8%. So still seeing a disinflation is happening in Australia, but maybe not at the same pace as what economists were expecting here. So this is why people suspect that the RBA is probably going to be the last to really pivot among some of the central banks in Asia as well. But what was driving that lower could be something like petrol prices, the introduction of cost of living rebates. That might have driven to prices to go a little bit lower. But yes, likely to see, there you go, Aussie dollar is actually reversing some of the earlier losses. We're seeing a little bit of a spike up here right now. So maybe some pricing for those December cuts could be priced out a little bit here. Keep in mind, they also have a meeting in September, too.
Yeah, there's a further pickup, too, in things like housing is at 4% inflation, booze and cigarettes. Do people still smoke in Australia? I think that's been phased out, right?
It's quite expensive.
It's quite expensive to do. Oh, to your point, 7.2% inflation on that. And also financial services insurance, 6.4%. Yeah, so still pockets of inflation there. Right, joining us still here on set to talk us and back to Chinese equity markets, where we are also in the thick of earnings season. Winnie Wu, China equity strategist at BofA Securities. Over the next few days, we'll be getting the big banks coming out. What are you watching most closely there?
I think banks, for this quarter, net interest margin will probably be stable to show small decline. But people's concern is that margin decline hasn't finished yet. If economy doesn't pick up, interest rates still need to go lower, especially in the Fed cut environment, then banks' top-line margin will continue to decline, which is bad for their revenue. But on the other side, the hope is that asset quality remains stable for now, so banks have room to manage the provision line to deliver a stable-ish bottom line growth. So we're expecting year-on-year modest decline on the net profit or EPS for the large banks. And we expect the large banks to pay interim dividend this year.
There's a lot of pressure among some of these lenders to help rescue property developers, which has been lukewarm. Is that likely to stay the course, really, in the next few months?
I think on the developer side, it's actually a shrinking problem, diminishing problem. Because if you look at the banking sector's exposure to the property sector, at the peak, it was 2019. It was 29% of bank sector's loan were to developers and mortgages, among which developer, I think, was like 7.4%, another 22% to mortgage. But after the past 4 or 5 years of continued decline, developer loans were shrinking or not growing, whereas overall loan growth is still double-digit. By end of last year, property-related loan is down to 22% of sector loan, and developer loan is only 5%. And also, in terms of the reported NPL ratio, most major banks are expecting property-related NPL ratio to be stable-ish or NPL formation peaking out. Because, the headline news we can see is that the major default, right, the large, highly leveraged developers already defaulted, whereas in the past year or so, the headline news is relatively stable. So the formation of property-related NPLs is slowing down. But on the other side, the concern is maybe it's not about any isolated individual sector, but it's more about what's the impact of the overall slowdown in the economy, right? Since 2022, we have almost 3 years of deceleration in the economy. The weakness in consumption, in growth, in household confidence. Is that going to lead to asset quality issues sometime?
Yeah.
Right? Asset quality is a delayed problem. And we are in year 3. So I think that's still a key question people are watching.
Well, is there anything visible on these balance sheets that might indicate asset quality? And since, well, we talk about that also, officials have been warning these banks, don't buy too much government bonds.
Yeah.
When that turns, that's going to be a problem for you guys.
Yeah. So on the asset quality side, the leading indicator would be those unsecured loans to the private sector or to household, right? Because secured loans are generally safer, and lending to large SOEs or government will generally be safer, easier to roll over.
Okay.
But household unsecured consumer loan and unsecured personal operating loan, or those like business startup loan, those could be the leading indicator in the asset quality downturn.
Okay, and what about the CGBs? What's the exposure there?
Yeah, on the bond market, I think the regulators' concern is mainly the smaller banks, lower tier banks, who are having lower loan to asset ratio, so they have more exposure to the treasury market in general.
Right.
And if it's more short-term behavior in terms of trying to trade on the bond market, betting on bond prices keep going down, yield going lower, then when the market reverse, as we've seen in U.S., right, in the SVB situation, then these smaller banks with relatively less solid balance sheet or capital position could be vulnerable. So I think that's part of the intention of the regulatory intervention or tightening.
Yeah, I'm just broadening out just before we go. You mentioned how, it's boring, but sometimes boring can be a good thing, right?
Yeah.
When volatility is low. Does that set us up for some sort of rally? How are you looking at the back half of the year?
Yeah, so I would say that in the early August market sell-off in Japan, in US, despite the global market sell-off, China was actually more resilient, right? It didn't break the mid-April low levels. So I think for this year, we probably have seen the worst in terms of panic, fund flow, outflow, and derating. So rest of the year, I would say it's a case of range trade, that we can still do some bottom fishing when market correct. But fundamentally, I guess the uncertainty remains to be, there could be a lot of political event toward year end, beginning of the next year, the geopolitical tension, where does that go? So, until the external market environment settle down, and domestically, the big question is still what's going to drive next year's growth.
Yeah.
Right.
This year it's export manufacturing is strong, but if even that weakens next year, what's going to drive next year? So until those two big questions on geopolitical tension and domestic growth driver being answered, I guess market will still take profit when they have a nice trading.
Yeah, well, to Yvonne's point, can we at least assume that MSCI China has bottomed? I'm looking at the chart; it's hitting higher lows and not lower lows.
Yes. Yeah, I would say for second half of this year, for rest of this year, yes. I think we've seen the worst for this year already.
All right, Winnie, always great to have you. Winnie Wu there, China equity strategist of BofA Securities. We talked about the banks. That certainly is going to be one thing to watch next few days. Also, we have BYD, Meituan, Bank of Communications, SF Holding that's going to be reporting all today as well. But it's interesting with Meituan, right? Because just given what we've been seeing with the likes of JD, what we saw with PDD, you're likely going to see that this slower economy is going to weigh on the results for Meituan. They're expecting to report 18% growth in revenue. That is the slowest pace of top-line growth we've seen in 2 years.
Yeah, that's a good point, because Meituan, as opposed to, say, the JD.com and Alibaba, which are e-commerce, right? Meituan is really almost the heart and soul of consumer activity.
Yeah.
Right? It's mobility, it's your small daily items, for example. I wonder if they'll do a buyback too, but that's a separate.
Well, we got to know what they're doing with Kita too, since they introduced it to Hong Kong about a year ago.
Yes. I've been waiting to download that, actually. Speaking of, thanks for the reminder.
A little bit slow to catch on to that one.
Okay. The other one is, of course, BYD, right? Our earnings too, right? That's later today. There we go. And some of the stocks, of course, on your screens that we're tracking over these next couple of hours. Okay. Why not? Let's talk about BYD, our EV and supply chain and aviation reporter. Wow, many hats here. Danny Lee is here on set to get us through, of course. BYD, just what do I need to watch here?
just see the strength of the earnings, because we've seen the likes of Geely, another big Chinese auto player, deliver very strong profitability after a multi-year period of lagging net income. So for BYD, how well are they going to perform, particularly since they've been leading this price war and then they've been shaking up the market at the same time? But still, there is still competition coming on the market. We still see upstarts coming in with sub-brands with cheaper vehicles, and so therefore the competition isn't stepping back, and so therefore the pricing of rivals is getting ever closer to BYD in the mass market range. And so how well are they going to set the agenda for at least strengthening its earnings, strengthening its war chest for the future quarters?
They've also been quite aggressive when it comes to their overseas expansion, and you've learned a little bit more detail from that. You spoke with the executive vice president, Stella Lee. What does she have to say about that?
Yeah, so she's set a kind of broad target of having half of the overseas sales, all of it, in terms of total sales, half of it will come from overseas in the future. There's no specific timeline on that, but I think it's a warning shot for foreign automakers that BYD is very much coming. And the fact that they're investing billions in overseas factories to get around the tariffs, to try and position themselves as other competitors are slowing their investment, are muddling their strategy on EVs. And so maybe if I come back in the next year or two, maybe we can see that divergence of what BYD is doing versus the foreign automakers.
Yeah, and well, on that point, can we then assume that it's Tesla and BYD in pole position here in China amidst this still heated competition? But to your point, some of these guys are starting to pull back.
Yeah, absolutely. At least, I mean, the pullback is very much happening outside of China, but within China, at the very least, the only two major players who really seem to have a grasp of what they want to do at the moment is Tesla and BYD.
All right, Danny Lee there. When it comes to all things BYD, what to expect here, our senior analyst for consumer, Asia Transport reporter Danny Lee, on what to expect. Okay, lots to come here. We got plenty more ahead. This is Bloomberg. All right, we're watching stock of course, 7 & I here this morning. They are heading lower in Tokyo. This new development emerging in the takeover battle brewing between the 7-Eleven owner and a Canadian rival, Couche-Tard. Now, Bloomberg has learned that 7 & I is attempting to get Japanese government oversight of Couche-Tard's bid, which could derail plans for the country's biggest foreign takeover. Let's get to our chief North Asia correspondent, Stephen Ingles. He's been following this story since we first learned about it. Yeah. What would this core designation from the government mean for 7 & I?
Well, first of all, it's a good indication because we haven't heard exactly from the companies, either party, yet on their, ultimate desire, especially 7 & I. They've appointed a independent outside group to kind of assess the deal that emerged early last week. But we haven't really heard whether they're going to seriously entertain this offer. What this move from sources telling Bloomberg to go to the Japanese government and apply essentially for core status, you ask me what that means. Well, essentially, core status would basically make the Ministry of Finance vet any kind of takeover bid trying to acquire a 10% stake or more. Now, this is what's interesting. Is a convenience store a core industry? Because those who are indicated as core businesses in Japan are in sectors like aerospace, rare earths, and very strategic ones that have security interest, nuclear power as well. Is a convenience store sellers of egg sandwiches and, of course, onigiri, the rice balls and the like, is that a core business? Well, the argument, according to sources, that 7 & I is going to use is that this is a ubiquitous business. 21,500 stores across Japan that provide 24/7, 24 hours a day services and supplies, food, necessities in the event of natural disasters. I was talking to Sherry Ann earlier, and she was bringing up the point during the Fukushima problems, obviously up in the north, 7-Elevens were open. They provided all kinds of supplies. And in that case, it was a core interest to the people to have those supplies ready. So it'll be very interesting to see whether the government of Japan goes down this road and provides this core status, which would be an indication perhaps that 7 & I, which is, been under attack from activist shareholders as being undervalued based on its 85,000 stores around the world compared to Couche-Tard, that would indicate that Ryuichi Isaka, the president and CEO perhaps, as well as the board, are a little bit wary of this takeover bid from Couche-Tard.
In fact, Steve, I remember when this news first broke, the first thing I think you said was, never mind what the actual bid is, right? Are the Japanese going to let this one through? Right, and
they have protectionist leanings in the past,
tendencies in the past, but it's a new Japan now, so to speak.
Yeah, there are new kind of what would you say, corporate guidelines to try to unlock and to invigorate corporate Japan, to give more rights to individual shareholders, to have more transparency in the boardroom, and that would potentially pave the way for this kind of takeover. And again, on a value basis, if you look at the numbers, Couche-Tard is a smaller company. It has far fewer convenience stores, Circle K's, around the world, but it has a much higher per-store enterprise value, 9 times more per-store enterprise value than 7-Eleven and 7 & I. And the market cap, $58 billion, that last calculation last week that I did for Couche-Tard and Circle K, $38 billion for 7 & I, the much larger company. So a Value Act Capital, they've been trying to unlock this value, trying to get the 7 & I, 7-Eleven, and I is Ito Yokodo, which is their underperforming department store. They want the department underperforming assets off the books, spun off. Already 7 & I is saying they're looking at that. Back in April, they said they're looking at that. But again, there hasn't been enough movements according to Value Act. So we'll have to see. The shares have been down this morning. Yeah. They're not unlocking necessarily shareholder value. They're going into the ring. They're lacing up their gloves, but with the government hopefully at their back.
Okay, yeah. Well, Steve, thank you so much. Stephen Engel, our Chief North Asia correspondent, getting us up to speed here on the latest hurdle ahead of this deal, of course. Right, benchmarks looking down moderately. CSI 300 Hang Seng Index, speaking of 7 & I, Nikkei 225 going into the last 40 minutes in the morning session. ASX 200 post fairly on the hotter side of things. So the CPI print, some of the components, and as you can see, that is perhaps the drag there on that specific market. Plenty more ahead. This is Bloomberg.
Over the past few years, bilateral relations have gone through twists and turns. The key is to keep the overall direction of mutual respect, peaceful coexistence, and a win-win cooperation. Implementing the common understanding between our two presidents as their San Francisco meeting is our important responsibility.
President Biden has been very clear in his conversations with President Xi that he is committed to managing this important relationship responsibly.
And that was the Chinese Foreign Minister Wang Yi and U.S. National Security Advisor just now there. Also, Jake Sullivan speaking in Beijing. And of course, Sullivan's visit is the latest effort to use dialogue to manage this strategic rivalry between the two largest economies in the world. Min Lo, our China correspondent, is here with us on set to talk us through this. And yeah, I mean, the talks began again this morning. I think we had one yesterday. Just get us up to speed. What did they talk about?
Yeah, so they had one yesterday, and it's continuing today. We don't have a lot of information yet of this closed-door meeting. We expect maybe Xinhua will carry a readout of the outcomes later today. But, I mean, this is Sullivan's first trip as the top national security aide, likely to be his last before the U.S. elections as well. But he has met with Wang Yi at least 5 times in the last 1.5 years. And some of these were clandestine meetings, which were only revealed to the media after the fact. And he has really been at the center of the sort of secret back channel communications to try to stabilize ties during times of great tension. So he was key to diffusing tension after the spy balloon crisis. He was key to laying the path for the Xi-Biden meeting last year. So there is some speculation now about whether this visit will lay the path again for a final Xi-Biden summit. Because remember, President Biden is now the only president in decades who have not visited Beijing during his time in office. So if he doesn't visit Beijing, there are still a couple of opportunities end of this year. In November, they could meet in the G20 summit in Brazil or on the sidelines of the APEC summit in Peru. But look, we're a couple of months away from the November election, so the objectives of this trip is not likely to look for breakthroughs, but to carry forward this stable momentum for the relationship into the next administration and to avert any crisis from happening in the last few months of Biden's administration.
Yep, especially just a few months into the election, as you say. Min Lo, our China correspondent there, on what to expect out of this trip. Another check of markets. Of course, we talk about the earnings story, and you're seeing some pretty sizable moves in the likes of Anto Sports announcing that big buyback program after the profit beat as well. Nongfu Spraying, that was what we saw. Earnings were a little bit on the wobbly side of things, slowest since 2020, so they are still caught in this sort of price war. Li Auto and Haidilao as well. Haidilao, I believe it was actually a beat. No, actually a miss.
It was a miss,
yes,
yeah. So it was higher in the pre-markets, and then it did follow the direction of the earnings relative to estimates there. Okay, yeah, so lots more coming up there too. Now, in terms of the other group we're tracking here today, so crypto and crypto-related equities, and on your board are well, some of the tokens and coins here. Bitcoin is back below 60,000, down about 4%. Ether down about 5.5%. So we're tracking this, I guess, as a gauge of the lack of risk appetite out there ahead of, I guess, Nvidia. Let's put that together.
Yeah. At what point we dropped as much as we did back in August 5th during that big market meltdown. So we are seeing a broad-based sort of sell-off across the crypto space. Coming up the next hour, lots of guests to tell you about. We're focusing on Australia's mining sector and the outlook for Chinese demand, breaking down those earnings from Fortescue and Lynas. Plus, we got Citi sharing their views on IPO and M&A activity in China. The head of investment banking for Asia Pac, Yvonne Metzger, joining us there. You're watching The China Show.
There's still a lot of structural tailwinds for the sector, but it became a bit overdone in terms of stock performance.
So we don't see that much upside at the index level. Valuations are fairly full. I think the economy and nominal growth outlook will drive stocks higher, but given where we are from a current valuation perspective, we don't see that much.
That's clearly not the case with the NASDAQ. In fact, if you look at the NASDAQ, it does seem, I'm not saying rolling over, but it does seem to be stabilizing at these levels.
I think that the AI theme continues to be the dominant theme heading into the next year or two, especially with company earnings have continued to upside estimates. It continues to be a very bright spot for investors.
People made a lot of money betting on AI, on the strong U.S. market. But if, for some reason, this trade start to unwind, start to tumble, then China may be an uncorrelated hedge that offers some value in portfolio allocation.
The silver linings playbook for what to do for the next 24 hours. Is it to rotate to China, or can we continue on with this AI theme? But yes, we talk about how lofty these expectations are. They're talking about what, 70% is what they're predicting in terms of revenue growth, or even higher. Can they actually deliver again, Dave?
You got to imagine that they need to scale that with some room to give to impress this market. The positioning is really mostly to the downside. We're getting downward protection coming through in index options, and the implied move in Nvidia is 10% either side. But I'm guessing, looking at what's happening in the index options market, that's really pushing to the downside, I guess, is the. But anyway, we'll see what they report and what they say, and of course, with that exclusive interview coming up as well with Jen-Hsun Huang. On the back of that, other market stories that we're tracking here too is, so in the last hour, we did get inflation numbers coming out of Oz, 3.5%. Estimate was for 3.4%, so still a little bit higher than expectations here. As you can see, this sort of hawkish wave is to some extent playing across Aussie assets with a stronger Aussie dollar, a weaker equity market, and as you can see, this melt up moderately across yields there, up about 3 or 4 basis points, led by the short that, as you can see on your screens. Now, speaking of Australia, and we're in the thick of earnings season there. So in this hour, in fact, we get the bosses from Fortescue and Lynas joining us here on Show Us Live to talk us through the recent results, and BHP, of course, just to color, I guess, what the background and the operating environment is for Fortescue. Also joined us yesterday, so stay tuned for these conversations coming up. And going into the Nvidia reports, we're not really looking at a lot of movement across price. And to underscore this, also on volumes, we're 30% below the recent average. So there's a lot of sitting on the sidelines ahead of those results, Yvonne.
Yeah, sitting on the sidelines, waiting with bated breath. We are waiting, finally. Mark Cranfield from MLive joins us now. We're going to be joined by Annabelle Jewellers, our tech reporter, on what to expect in these Nvidia earnings. But, right, Belle, I'll start with you, right? So we talked about just where the market is expecting here. What do we need to see specifically for them to really deliver?
Yeah, well, it's really got to be coming down to not just them at least meeting expectations. As you were saying, there's that expectation we're going to see a 70% rise in profit on the year or revenue on the year. Not only do they need to meet that or exceed that, because there's indeed some on Wall Street that are expecting another blockbuster number, but perhaps we also need to get a good indication of what's to come in the outlook. And this really relates to the Blackwell chip lineup in particular. We've been discussing in the last hour, but also we had reporting earlier this month talking about this Blackwell chip lineup, that there could be delays to it, and it's certainly seen as the next generation of AI chips. And so if there are delays, that's what investors are really curious to hear about from management. Are we going to get reassurance around those? Production is still expected to ramp up in the second half of this year.
Mark, where's your head at right now as it pertains to Nvidia and its derivatives across global assets?
Well, clearly, it's the reason why we can't afford to ignore it is because the numbers involved are so huge. You've been talking about some of them, and it just means it's too big to ignore for any asset class. So just to put it into some perspective, you're talking about a potential 10% move for Nvidia stock today, either way, regardless of what happens on the results. That's what the option market is suggesting. Now, that is equivalent to around 300 billion worth of market cap. Now, the largest stock in the Hang Seng Index is Tencent, who has a market cap of about 450 billion. So we're talking about one company having a one-day move, which is almost as big as the largest company in the Hang Seng Index. So on that basis, nobody can afford to take their eyes off of what Nvidia does tonight when they report. And of course, the risks are very much more so if we get a miss from Nvidia, something that causes Nvidia's share price to fall. That will probably trigger a risk-off event across everything. So you'll get a bid for treasuries, you might get a defensive bid for the US dollar. It will cause widespread weakness in equity markets, which will surely roll in to Asia and Europe the following day. If it goes the other way, things will probably coalesce mostly around the equity sector. The other assets will probably be able to look past it. There'll be some initial reaction, but mostly it will be within the stock sector. So certainly, the biggest risks to the markets are something that triggers a sell-off in equities, which then spirals into a haven play in other markets, which is no doubt why we have such a huge amount of downside S&P options built in before this happens. This has become a worldwide event. This is no longer a single company event.
Belle, what are people saying about the stock? I mean, we still haven't found any rival that can actually, overtake the dominance that Nvidia still has here right now. Does that mean that the stock can actually move higher from here?
Yeah, well, that story certainly still really seems to be intact. Of course, Nvidia has sort of competitors in the space, but really no one can continue to match the company. And they do take about a 90% share of the AI chip market. Certainly, there are a lot of analysts out there saying that even at this sort of valuation, there's still further upside. For instance, Morgan Stanley is one of those. Their price target on the stock is around $144. And they are saying that even with those perhaps perceived delays or possible delays around the Blackwell chip, even with the risk that we're still not seeing any sort of revenue gains from AI spending by big tech companies, that there is further room to run, even at this point in time.
Mark, back to you. Beyond perhaps Nvidia, beyond today, what are some of the other sort of major catalysts that might affect macro trading?
Well, once we get past that, we've still got the PCE report to come in the United States. Very important for the Federal Reserve, of course, heading in the right direction, but they still need to justify getting close to 2%. And then at the end of next week, we've got the unemployment report, which is the most important data piece before the Fed sit down in September. That's really the one that's going to decide whether there's 50 basis points on the table or only 25 basis points. So still a couple of very big things ahead for people to focus on once we get past that. And by the way, I couldn't afford the Jen-Hsun leather jacket, so I've got a substitute on today.
That's
not
better, Mark.
leather. Look, it looks waterproof though.
Yeah.
Mark, it looks good on you. Yeah. We all can't afford that Jen-Hsun Huang leather jacket. He's got multiple ones too, I'm guessing.
Oh, I hope he does.
Yeah, and I heard it was
not
heavy.
A single one.
Yeah. Mark, thank you. Mark Granfield, MLI strategist, and our tech reporter Annabelle Jewelers joining us with a preview of what to expect out of Nvidia. You can catch our exclusive interview as well with the boss himself. I'm guessing we know what the wardrobe's going to be for earnings day. Jen-Hsun Huang, after those results, is going to be joining our very own Ed Ludlow for Bloomberg Technology's special coverage of Nvidia on August 28th in the U.S. That is today, 6:30 a.m. in Hong Kong on Thursday.
Okay, if you're a bit sick of talking and hearing about Nvidia, coming up next, we're talking miners and metals with Fortescue. The CEO joins us. They reported earnings, a big jump in annual profit, more on the company outlook, and also what they see as demand in China is concerned. That is, of course, the big story as it pertains to the global metals market. Stay tuned for that coming up and more. This is Bloomberg.
All right, Nongfu Springs, not looking too good here today. We're seeing it down about 12.5%, so extending that fall is the slowest half-year profit growth since its listing in 2020. So really a bit of a disappointment across the market here today. We got plenty more ahead. This is Bloomberg. All right, checking Fortescue shares here this morning, and we're seeing a bit of a downside, about 1%. And really, we talk about what happened when it comes to earnings. So it did miss forecast when it comes to profit, but still able to talk about 3% growth here when it comes to underlying net income, and of course, able to weather this China slowdown as well. So certainly, we're itching to see what the CEO Dino Otranto has to say. The CEO of Fortescue Metals joins us now, live from Perth. Dino, it's great to have you on the program. Thank you so much for joining us. So yes, it was a miss in terms of expectations, but needless to say, it was still a pretty strong earnings season for you guys. But can you tell us a bit more about what led to this drive to lower profit, not just lower profits, but I should say lower shipments?
Well, thanks for having me today. We've just announced another outstanding set of results, returning nearly 6.1 billion Aussie dollars to shareholders through a really healthy dividend, putting us in the upper range. Shipments actually were near record highs at 191.6. We just missed last year's record high of 192. Next year, we're forecasting another strong year with guidance of 190 to 200 million tonnes into FY25. So well on track to continue that performance.
Okay, Dino, a lot of, I guess, but interesting enough, too, and just to I'd point out to our viewers, I could be wrong here, but your earnings statement did not include the word China in it, which is interesting because that is, of course, a key market for you guys. But just as a side note there, but what do you see as far as demand is concerned from that big market?
Yeah, it's certainly not a side note for us. China accounts for 90% of our offtake, and since our inception 21 years ago, our partnerships with China get stronger and stronger and stronger. And I was in Shanghai just recently talking to our steel mills, Baowu and alike, about the market and about Fortescue's product. And certainly we're seeing a transformation in the market of China. For us, we're actually encouraged by the maturation of the market away from just purely property and development to a more sustainable, more long-term market. And at current rates of steel production, it bodes very, very well for Fortescue, whose products, we're the fourth biggest iron ore company, leading the world in our cost position. And more importantly, our product suite really caters for all aspects of the cycle in China and around the world. So we're seeing our products move through Chinese ports very well. And most recently, we've announced our diversification into green metal, which is the downstream of iron ore, and then exporting a 95% green iron metal out of Australia and around the world into China. And that one point in China was where we got the most interest from our steel mills. So encouraging to see the continued transformation of China's economy to go green. And steel is one of the hardest to abate sectors. We believe in partnership with China and other countries around the world. We can conquer that with Pilbara-based iron ores out of Western Australia, using the sun and the wind we have in excess in WA to then continue to export products in insatiable demand in China.
Yeah, it's interesting that energy transition, right? We did hear from the BofA Steel chairman just a few weeks ago talking about this severe winter that's about to go underway, about just how we could be seeing a similar crisis to the ones in 2008 and 2015. But then again, I'm hearing from your peer, BHP, Mike Henry, saying that he thinks demand in China has actually plateaued. Which camp do you feel like you're on right now? Are we seeing signs of a floor in iron ore prices?
Well, I was actually in China with BofA Steel, BofA Group, and the chairman a few weeks ago when he made those comments. And I think both Mike and chairman are actually saying the same thing, where the plateauing of steel in some senses would spook the market. But for us, that plateau is at a much, much higher level than it's ever had been before. And again, that bodes well for an organisation like Fortescue, whose product suites do cater for all parts of the cycle, low steel mill margins, and then when the margins recover, we do have a product suite at higher and lower grades to be able to account for that. And now with the additional diversification into green metals and that energy transition that you mentioned, Yvonne, we are very confident in those long-standing relationships we're having with China, getting us through this next period. And it's interesting, even of the last couple of weeks, we've seen some market participants, namely out of India, remove tonnage at that $100 price point, which is starting to turn that price again. But we announced a $18.24 C1 cost for our suite, so $100 a tonne are exceptionally good margins for Fortescue.
Okay, well, since you mentioned the iron ore price, Dino, where do you think iron ore prices, what do you think the average will be? Let's say the next 18 months.
Nice try, David. I'm not going to ever forecast what our iron ore prices will be. We focus on the things that we can control, and that's production and cost and safety. And today, announcing a 30% reduction in the number of injuries we had, that doesn't surprise then for me that we're coupling that with record production performance and very, very cost competitive C1 costs. So bodes us well, again, in all aspects of the iron ore price cycle. Thank you.
Right. Well, short of giving us a forecast and, fair game, surely you and your team must have an assumption of, what that demand curve looks like at a certain price. And you just outlined for us where you hope your production will be in the next year or so. You might be able to top what we had this year, for example. So what is that iron ore price assumption?
Yeah, look, we cater, again, for all aspects of the pricing cycle. We have a great team. So what we know is that we can withstand any aspect of the pricing cycle. That's why our drive is to make sure that we're positioned at the very lowest end of the cost curve. And we've held that position for the last 10 years, and we plan to continue to be at the lowest end of the cost curve. To guard against exactly your point is to insure us against any aspect of the price curve. And it's interesting that you see at around $100, you're starting to see volumes come off the market, which is then starting to give you that floor or price support back up over $100.
And Dino, I was going to ask you, back in December, you suffered this train derailment that was caused by extreme heat. I'm just wondering, because I know, winter for you guys ends this weekend, but you've seen a surge in temperatures recently. There's been a 50 million Aussie dollar program in your filings that shows maybe that you're looking to accelerate derailment. Are you expecting that extreme hot weather is really going to start affecting your operations once again?
Yeah, so in the Pilbara, there's no real winter. It's hot or hotter. And we've certainly seen we don't see climate or temperatures increasing. They are increasing already and have been for some time. We have to cater for that, right? And the derailment you talk about, the December last year, was probably some of those signs where that temperature profile is starting to increase above even our own expectations. And we are forecasting that the Pilbara area will continue to get hotter over the next few years, and we have to respond to that. The re-rail program that you mentioned is part of our normal sustaining maintenance activity. However, we did have to accelerate that particular area that suffered from what we're calling a heat buckle in our rail network, hence the call out.
Okay, well, since we're talking climate, I mean, it's part of your statement here, of course, your net zero targets for the company. 2030, I believe, is that timetable, or your target at least. How much have you spent to decarbonize the business?
Well, let me correct you on one thing, David. We announced a real zero target, not net zero, which means no offsets. We've also announced a US $6.2 billion plan, which we believe is economic to decarbonise our operations, which means removing nearly 3 million tonnes of carbon dioxide from the production of our iron ore in the Pilbara. That means completely ridding ourselves from hydrocarbon consumption, getting rid of the diesel generators, getting rid of the gas generators, replacing all of our generation facilities with solar and wind, and also our reticulation networks. We've already replaced them. This year, we started to take delivery of some exciting new green electric fleet in trucks. We're just about to launch our green train. We've already got green excavators. We launched our green ship last year. So we are absolutely on track to meet real zero by 2030. And that was a mark that nobody thought was possible. And I'd invite you all to come and have a look at our operations in the Pilbara. But if you can't make it, we're launching this truck fleet in partnership with our OEM supplier in Vegas at the start of end of September, October. So we'd invite you down. It's going to be a huge event. Our chairman will be there, and we're going to have a significant launch of our new battery electric truck.
Yeah, well, Dino, a lot of green. The only thing that's not green is your stock price. I think Yvonne has a question for you.
Well, it's basically, we're back to what, sub $20, right, for the stock. And it's probably the lowest we've seen since February, Dino. I'm just wondering, are we ever going to get back to those levels of $30 anytime soon? And what do you think that loss is attributed to?
Well, if you look at the trend of our stock price with the iron ore price, you certainly see a correlation over the last 3 to 4 months with the slight turnaround, as I've mentioned before. We've also are very confident in our Fortescue Zero business, which is marketing and selling those products to help others decarbonise. In fact, we've started to sell technology and software to the automotive industry. Now, who would have thought an iron ore miner would be now a tech company through our Fortescue Zero platform? So the power systems, the battery manufacturing, some of our inverter technology is cutting edge, and we are now filling order books for that market. And then the third pillar is our energy projects, and we have discussed about our focus around securing our green electrons to then start that hydrogen and ammonia business. Just as interestingly enough, as I was in China a few weeks ago, I was there when the government announced that the coal industry, the coal-fired power industry, would have to take 10% of all of its feedstock as ammonia fuel, which means if you look at the numbers, they're simply eye-watering. So we are seeing now the markets for green energy in terms of green ammonia and green hydrogen and green fertilizers starting to take off, and I believe you're going to see that multiplied now over the next decade to come. And we're really well positioned in our geographical footprint to cater for those markets.
Yeah, Dino, for a moment there, since you were talking tech, we were joking about, as the three of us before this interview, about Jen-Hsun Huang. For a moment, I thought I was talking with Jen-Hsun Huang there. Dino, congratulations on the results again. Dino Otranto, the CEO at Fortescue Metals. We'll have more on the mining sector later this hour. The CEO of Australian rare earths producer, of course, Lynas, will be joining us. There we go. Those times on your screen. Stay tuned for that. Plenty more ahead. This is Bloomberg.
All right, the clouds are looming over Tokyo, but we're still looking like a pretty good day out in Japan. Right now, we're heading to that lunch break, and we are seeing the Nikkei 225 just slightly to the downside here. We talk about how quiet markets really are. We're just counting down to one thing. It's really Nvidia to really give us the next sort of signal for these markets. Dollar yen, a little bit on the weaker side for yen. We're trading around 144 levels. But it was interesting. We talk about what BofA's Adar Singh was talking about fair value for the dollar right now, unlikely to see further weakness. They're talking about when it comes to signs of growth, not just in the U.S., but even China that is weakening. You're going to still see that safe haven flow back to the dollar in some ways.
Yeah, and everyone's cutting too, right? Except for, of course, the BOJ, right? So, that rate differential that people talk about when the Fed starts cutting, that might actually remain fairly constant. Dollar, bottom of your screen is 1226 there against, well, that's the Bloomberg Dollar Index there. Okay, let's have a look, of course, at some of the big deals, of course, taking place, and just an update, of course, and this, the update we got, of course, out of 7 and 9, and we were talking with Steve earlier on, of course, that there's now this key hurdle taking place ahead of that deal there.
Yeah, this is according to our Bloomberg sources. When it comes to the 7 and I deal, we're seeing shares there actually were falling in Tokyo after Bloomberg revealed that the company wants extra Japanese government protection from foreign takeovers. Sources say the operator of 7-Eleven store is seeking a redesignation under Japan's Foreign Trade Act to require prior notification of any purchase of its shares above 10%. That could be a hurdle for Canada's Couche-Tard to move forward with its buyout bid.
Now, staying on the deal space, or in the deal space here, NFL owners have voted to allow private equity firms to buy as much as 10% stakes in their franchises, loosening some of the tightest ownership rules in professional sports. So, on the back of that, or as a function of that, perhaps deals are expected to happen quickly with firms including Artos Partners, Ares Management, and others, of course, already vetted and also approved. Stakes can sell for as much as $1 billion. So, in other words, brace for more transactions there on and off the field. To get a sense of the deal space and the outlook here in the Asia Pacific, we're joined here in sets by the head of investment banking for Asia Pacific at Citi, Metzger. Joins us right now. Good morning and nice to see you.
Good morning, David. Good morning, Yvonne. Great to see you this morning.
How busy has your team been, and where have you seen the busiest fronts as far as transactions go?
Yeah, actually, we've been incredibly busy across Asia, but in particular in Taiwan and India. And we've seen a huge surge of activity. In India, it's really interesting. There's a huge amount of domestic demand, and clearly the country is growing very quickly and creating a lot of great companies. So that's caused a lot of interesting demand for us. And in Taiwan, what's really interesting is we're going to see the world move where in the last 20 years, a lot of the great companies that got created, a lot of the great equity values that got created were business model changes, new ways to buy things, e-commerce, new things to book taxis, transportation as a service, new ways to engage with video, to engage with Bloomberg. All right? In the next 20 years, you're going to see not business model innovation, you're going to see real hardcore tech.
Yeah.
Things that need PhDs, scientists, artificial intelligence, semiconductors, new kinds of materials. And that actually plays well for a lot of Asian countries.
Yeah.
But in particular, that plays well in Japan, as well as other places in Asia.
You sound reinvigorated. I wonder, when you take a look at deal sentiment out there in Asia, do you think that things are really picking up? Volumes-wise, what about size of these deals? Are they sizable?
Yeah, so look, I do want to split it into two a little bit. One thing I do want to say is the underlying economic activity, the underlying innovation in Asia is at an all-time high, and more exciting companies are being created than ever before. So if you look at China, there's a new unicorn every 6 days. And you wouldn't believe it if you looked at deal activity. But the way to think about that is the back pipeline is building. And high interest rates as well as investor sentiment is holding that back a little bit from coming. So when it does come, the next bull market run is going to be sustained long and high.
Right.
And we think that's about somewhere between 6 months to a year away.
Oh. Okay, well, how much do you think we'll see this year? We were speaking with Bonnie Chan. And she looks at the same pipeline you're looking at there, and she's optimistic. The thing is, companies are not pulling the trigger, though, when you look at Hong Kong.
Yeah. So it's my job to be optimistic, so I don't know if I'm a good source to ask this question. So in line with my job, I'm very optimistic for the second half.
What needs to change before we start seeing these deals come through in Hong Kong?
On a very micro basis for the clients that we interact with on a daily basis, there's a little bit of valuation sentiment on the corporate side. So the higher interest rates have reset valuations a little bit, and what you do need to do is you do need to see people that are willing to say, hey, I'm going to go public at a slightly lower valuation than my last round of private financing, and then I can move forward. The other thing to realize is there are so many great companies being created that in the private markets, great companies are still able to raise financing. So that's making them delay the public financing a bit, but ultimately it will come.
So the big China IPOs, you think that could come to Hong Kong? We also seen a lot of Chinese companies listing in the U.S. again. Where do you see this all going?
I think a lot of them will come to Hong Kong. I also think that the U.S. is an incredibly viable listing location, and a lot of entrepreneurs will enjoy doing that. So I do think that Hong Kong will thrive. I also think that Chinese, Hong Kong, and Asian companies will actually also go public in other markets around the world. And so I'm actually positive on all these exchanges.
Mm-hmm. One thing we keep hearing on and on about, particularly here in Hong Kong, Jan, is Middle East, these corridors, these networks, these, a lot of the business delegations are back and forth. Yeah. Are you guys active in this space? Give us a glimpse of what's really going on.
So hugely active, actually. And what's really interesting is the Middle East as a corridor into Asia is going to have a huge future. There's a few reasons for that. One, the Middle East is very asset-rich and continues to create huge amounts of assets that they need to deploy. You could argue that historically the Middle East has underinvested in Asia a little bit, and even just a little bit of rebalancing is going to bring huge volumes to Asia. And what else is very, very interesting about Middle Eastern investors, they're very smart, very sophisticated, and they're looking for new kinds of technologies and opportunities. And so, for example, electronic vehicles in China is an area of real interest for them.
Yeah, I was going to ask you about, we have a U.S. election that's looming in just a few months or so. Does it change the environment at all for Chinese deals and how multinationals look at their Asia operations now?
So that's actually a great question. If you look at Asia as a whole, or you look at every individual country, Asia is still today growing faster than the US and Europe. And if you look at multinational companies, their investment into Asia is still growing because of the growth rates that they can see and that they can achieve here. Even when people talk about a slow China, it's still growing faster than many of the developed nations in the world, and as a result remains an interesting investment opportunity. The one interesting change that we do see is that domestic competition from Asian companies in their own markets is going up. So foreign companies can thrive, but they do need to make sure that they are value added compared to the local competitors. The other interesting thing we're seeing greater confidence in Asian companies moving out to the rest of the world. And actually, within Citi, we have 10,000 clients in Asia. We are active across 160 markets in the world, and many of our Asian clients bank with us in 80 countries. And so that's actually something that we're very excited to help with. Now, one thing which is important for our investment banking business is that the more complex the world, the more value we add to our clients. So that's something that we hope to continue to be able to do.
Well, you guys sound busy. Are you guys done cutting jobs?
We never really cut jobs. We restructured to be a simpler organization. So that simplicity is paying big dividends in terms of the time that people can focus on clients, the time that I personally, I'm feeling it directly, that I'm spending time with clients is up. So actually what Jane has done that is very, very positive for all of us is just made the organization simpler and allowed us to move forward.
Right. Well, as a final one there, are you looking to increase headcount given how busy things look in markets like India, Japan, Taiwan, as you just laid out?
That's a great question. Yes, in specific areas, absolutely, and it depends where the deal activity is up and where we see the deal activity going. So in selective markets, absolutely.
Jan, it's a pleasure to see you. Let's do this again soon.
Yeah.
Jan Metzger, there, head of investment banking, Asia Pacific at Citi. Right, just ahead, Kieran Shows will be back on earnings. Lynas CEO Amanda Lacaze will be joining us. The company, of course, reporting net income beating estimates. So we'll get a sense of the business, the outlook on the sector in a couple of minutes. Stay tuned for that and more. This is Bloomberg. Okay, welcome back to the show here. You're watching the China Show. Lynas, there you go, on your screens, up 3.2%. Earnings out a couple of hours back. Net income, of course, coming in above estimates there. So let's get a sense, really, of what the outlook looks like, what the guidance is, and, of course, what the sector looks like, given, of course, the softness in the one key market, China, and what the rest of the world looks like as a diversifier for these big players. Amanda Lacaze is joining us right now, CEO and Managing Director at Lynas. Amanda, first, good morning, and thanks for coming on the show. I just want to get, so I had the press release. I want to get your personal description, how you think you guys did.
We had a very busy year. Actually, most years are very busy at Lynas, as it turns out. But we did have a very busy year. At the heart, right at the beginning, you know, ensuring that we dealt with some issues that we had with respect to our plant in Malaysia was really important. The Malaysian government has been very supportive of the development of the rare earths industry in Malaysia, and that has been to our benefit. As well as that, we've had a large capital program which was set in place some years ago to ensure that we would be able to grow our output at the same time as the market was growing. During the year, the price certainly moderated much more than I think most people thought it would. The price a couple of years ago for NdPr was very high, and we certainly thought it would moderate, but it stayed very low for a long time.
And that's really led to a significant drop in your profits, I believe about 73% on those low prices, Amanda. I'm just wondering, you've been able to cut costs by about 17%. How dependent is the company to, of course, these rare earth prices? And how do you ensure the sustainability of it given these downturns?
Yeah, so we are a rare earths company. We are a minerals company, and I think any minerals or mining company would tell you the same thing. You actually have to look to your business. We talk internally about our cost is our muscle. And so we have to be confident that we can operate as a low-cost producer, and we can be profitable when the price is low, and we can be more profitable when the price is high. So we confidently face into the market, knowing that we are one of the lowest-cost producers of rare earths in the world, and we're very pleased to see that the market price is starting to move up, and that's really, we are seeing some pickup of demand, particularly inside China, and some destocking of some inventories that I think had been built up on the back of previous demand.
Right, and Amanda, as you point out, alluded to, that's obviously outside the control, mostly of the control of the company, where you go with price. You mentioned you are seeing early indications of maybe a bottom in the price. Where do you see prices going?
Well, actually, prices have improved. Just in the last couple of months, they've gone up. And in fact, I said to one of to our team yesterday, because the price went above 400 renminbi a kilo in China, I said, well, I guess we can have some Australian sparkling, but we're not yet into drinking champagne. It's certainly going in the right direction, and we're very confident that we will continue to be able to build margin as the price increases, because we will sustain our strong focus on cost and cost efficiencies.
Amanda, you guys are also the world's largest rare earth producer outside of China, although China is also a key market for you. What do you make of the development in these markets like the U.S., like Europe? Do you think that things are progressing fast enough?
So I think that there's been a real focus on diversifying supply chains for all critical materials. And I don't just mean minerals. I mean that particularly in the pandemic, we identified weaknesses in supply chains for many materials. Rare earths are an essential material as we go through the energy transition in the 21st century. And so it has become a matter of interest for governments beyond East Asia. Certainly for a very long time, both China and Japan have been very alert to the importance of rare earths. It took a little bit longer for some of the others to do so. What you have is now, I think, particularly in the US and Europe, a slightly more nuanced approach to policy than there was maybe 3 or 4 years ago. There is a recognition that if industry is to develop, it needs a combination of both carrot and stick. There are incentive-based policies, for example, the Inflation Reduction Act in the US, but there are also policies which are determining that users must meet certain guidelines, and that's things like the CRMA in the EU. So I think that governments are becoming more nuanced about their policy settings, and I think that that will help to develop the industry more. But it's not just about resource and about rare earths processing. It is about metal making, magnet making, and high performance motor making. And so this is about the whole of the value chain for rare earths, not just about one stage.
And so that takes me now to, you mentioned facilities and you mentioned Europe and the U.S. You mentioned Malaysia too earlier on. I want to ask you about your processing plant in the U.S., which I believe last year you got approval for. You are getting subsequent approvals for that as well, although the press release does say there is a bit of a holdout there as it pertains to, I think it's wastewater management, a permitting issue there. Not to get into the details there, but when do you think we'll see that plant up and running?
Fortunately, I've done enough projects to know that if I predict when a regulator will make a decision, I can almost certainly be wrong. We do these. We start off with the project and the team of young people who work on licensing show me the timeline, and I say, well, I'll be absolutely delighted if that's the outcome, but quite often it is not the outcome. So I would say that what we're facing in the US is within normal boundaries of what we would see in any approval process for a new project.
Speaking of the U.S., at the start of the year, Lynas was actually in talks with MP Materials about a possible merger, but it seems like those talks broke down in February. Can you tell us what happened? Why did this work out?
Oh, it's like any M&A, Yvonne. It only happens if you can reach agreement on value, and you cannot reach agreement on a value which is not going to ensure that you're able to have a successful business as you go forward. So we didn't reach an agreement on value.
So are there other opportunities that you're looking for, Amanda, maybe closer to home in Australia that you would consider?
We keep a watching brief on all of the various projects, but it is really worth noting one of the things that we released early this month was an updated resource and reserve statement for our Mount Weld ore body. As a minerals company, what is in the ground is the thing that drives your value. And after 10 years of operations, we were able to increase our ore reserve by 63%. It is evidence of the fact that continuing to invest in exploration of the Mount Weld ore body is an excellent economic pathway to success. But we keep a close watching brief on all the various projects because it would be foolish of us to think that our geology is the only one which is going to be successful globally. We just haven't seen anything else yet that would say to us, divert our funding from developing Mount Weld to developing another deposit.
Amanda, it's great to have you. Amanda Lacaze there, CEO and Managing Director of Lynas, joining us from the Sunshine Coast. If you are a Bloomberg subscriber, you can catch up with all of our interviews by using our interactive function, TV Go. Join the conversation. You can send instant messages to our team, questions for our guests during our live shows as well, so check it out at TV Go.
All right, welcome back to shows. Earnings. Nongfu Spring, as you can see there on your screen, downstream. Massive move down in the stock there. Zhong'an Online also, as you can see, down about 20%. That's also on the back of some numbers which came through as well. And set to come out today is Meituan. Pay close attention to that. Sorry, I forgot. Anta Sports. That's really on the back of the buyback that was announced. As well. Right, China duty-free. Okay, some of these stocks that are related to the sector are seeing some substantial gains. They're on the back of, I think there's some news here that the government, or a blueprint that they're looking to perhaps open up the capacity of the sector, and shares are responding today. Let's see what happens with this. Of course, it is, of course, a very key part of the consumption story here as it pertains to tourism flow as well. Okay. What else are we tracking across these markets? Apart from the earnings story, which is really front and center in China and also Australia, the macro story is really not even the Fed. It's one corporate story.
Until we get through Nvidia, right?
Yeah.
As Mark Granfield said, then you got PCE inflation.
Yeah, we can worry about that.
You got the U.S. jobs report. That could be the big one about September. But for right now, we're building up to this, right? I mean, look at the amount in terms of the growth numbers, in terms of what valuations are saying here right now. Investors are basically on tenterhooks to see whether Nvidia can actually deliver explosive growth once again, or they're going to have to start tempering those expectations, right? So either way, we talk about these big swings. It's 10% in either direction here right now. Dave's talked about how there's been a lot of hedging going around leading up to this as well. But yes, there's still a lot of questions about sustainability of growth, but then again, the Blackwell chips, right? There's been some rumors of delays too.
Yeah, and hopefully we get more clarity on that as well. A note on valuations. It's actually trading at the same valuation it was about 5 years ago because of the earnings growth this company is delivering. And stay tuned, of course, for our big interview coming up exclusively with the boss at Nvidia.